guys, thanks for stopping by and watching my market report here. This is Mike, and we'll get started. We got one item here on the economic report, and that is the New York Fed or Empire State Index. This is manufacturing in the New York region. So back in January, we had a 3.5 points on the index, which is just barely above. Basically, zero is the contraction period. So anything below zero is contraction, anything above is expanding. So January wasn't a great month, but forecast was supposed to be uptick for at 6 on for February, and it jumped all the way up to 12.1. So good number right there that we're seeing in February. So good start. Let's jump ahead, take a look at the headline news. Stocks are mixed today. We're kind of getting into recovery mode. Investors are kind of viewing, see where things are at. We got vaccinations are coming out a bit. We got uh, people starting to go back to work a little bit. As things kind of reopen a little bit. COVID cases are down. Different things of those nature. So they're kind of reevaluating. And plus, you got the Fed putting in a lot of money into with their asset purchases, and the government's printing out a lot more money. The concern here is a possible inflation. So the inflation is the enemy of bonds, which we'll see how that's reacting there. We got the stimulus package coming out with a lot more government spending on there. We're talking about wage increases to minimum wage being increased to $15 an hour. That will also add to inflationary pressures as well. And again, this is stuff that even stocks may take a little bit of a hit or some type of correction at some point due to inflation may be just, you know, uh, artificially inflating their values at this point. So this is some stuff that investors are going to really be taking a closer look at. You may see some type of correction in the near future. But because we got inflation, we'll jump over here to mortgage-backed securities. We are tanking pretty badly. We're down 48 basis points. That's basically half a point in fees right there, what it would cost. So I know you saw Friday wasn't that great, and we sank a lot further down as there's been a big sell-off today. Treasuries spiking. We're past this technical level here, and then trying to break above the next one. We're just under 1.3 now. We're at 1.29 as of right now, and that just took a big, huge spike. And just imagine a year ago we were well below one, like down to like 0.6, about half of that range. So we're like doubled that up within a year of treasuries here. So again, rates are a bit higher today. As you can see, that's a pretty big spike as we saw, and that could translate to a few points on the rate sheet. So that could be about at least a quarter, 3/8 of a percent of a rate hike in fee, rate hike on that. So, all right. So that's if you guys got any questions or anything I can answer for you guys, or a little bit about myself. I am a loan officer. I do work with a national lender, so I'm more than happy to not only talk about interest rates, but if you got questions about refinances or if you got questions about uh, buying a home and needing that pre-approval and financing, I'd be more than happy to talk to you a little bit about that. Please feel free to reach out to me anytime, and we can discuss how or answer any questions you may have on those. You guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye-bye.